morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. And joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. All right, so woke up this morning, a lot of texts on my phone asking what happened to Bitcoin. Lawrence, we'll get to the markets with you later on. All right, taking a look at the price of Bitcoin. Trade blocks indexes are now the CoinDesk indexes. The CoinDesk Bitcoin price XBX index right now is currently trading at 49,300 and some change. Bitcoin is down over 10% over the past 24 hours. And the CoinDesk Ether price ETX index right now is trading at 22.55. ETH is down over about 12% over the past 24 hours, basically erasing all of yesterday's pretty impressive gains. All right, so according to CoinDesk data, the most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. Lawrence, what is going on with the markets?
Complete fear, I guess. I don't know. The New York Times reported that President Biden was planning to is going to propose doubling the capital gains tax on people earning more than $1 million. President, for those who don't know, the president doesn't actually pass this legislation. It goes to Congress. Well, Congress is controlled by the Democratic Party right now. So if he does propose it, he's got a lot of people who would side with it. Anyway, that triggered a sell-off, a lot of sell-offs. And that got accelerated a bit because there was quite a bit of leverage. Even Ether got pounded. Again, people were just saying, what better way to greet higher taxes than to create a taxable incident? I don't know. But there we go.
Mm-hmm. In other news, Emily, we see that Coinbase is listing Tether, which is pretty controversial. USDT is very controversial in the community. What can you tell us about that?
Yeah, so it's Coinbase Pro, and they are listing USDT, which is kind of a bold move given that Coinbase just went public. So USDT is listed on other US exchanges like Kraken and Binance US, but one could argue that the Coinbase is subject to more scrutiny from the SEC. So this is kind of a bold move. And what's interesting about this, too, is that this is not applicable in the state of New York because USDT has been under particular pressure from the New York Attorney General because they've had questions about their transparency and their accounting. So it will be really interesting to see what happens, but it's seen as a vindication of USDT of sorts.
Okay. Very interesting. All right. Well, our first guest heads BlockFi, a crypto trading and lending platform which allows users to earn interest on Bitcoin deposits. Joining us now is BlockFi CEO Zach Prince. Welcome, Zach, to the show.
Hey, thanks for having me back. How you doing?
All right. Would love to have you weigh in on what is going on in the markets this morning. That's the big question.
Yeah, I mean, look, I agree with the comments a minute ago. I think the, tax rate news from the Biden proposal put a little bit of selling pressure, a little bit of a, risk off mindset in people. And we've seen moves like this before in crypto where something in traditional markets that affects a risk-on trade trickles through to crypto. But I think this is ultimately going to be looked back on as, a buying opportunity. There's a lot of long-term trends that are still intact, including institutional adoption and just the overall growth rate of the various networks represented in this asset class. So I don't know if you've seen my tweet from this morning yet, but I actually woke up and bought some Bitcoin this morning. And I think that that would be a smart move for anyone who's capable of doing that.
All right. And maybe you can explain a bit about crypto lending and how it operates in a volatile environment like this. And what is the value that crypto lending brings?
Yeah, so I would say overall, we're promoting capital efficiency with crypto lending. And it's really the idea of having debt and credit markets for this asset class. So I'll give you a couple of examples. So from the long Bitcoin side of things, one of the things that happens is, let's say you bought Bitcoin a year ago, and it was around $10,000 to $15,000, and now it's obviously much higher than that. If you sell the Bitcoin, you have to pay taxes. It's a taxable event. Those gains are realized. Currently there's some benefits for long-term capital gains, but those might be going away. So the incentive to borrow against your Bitcoin rather than selling it might actually increase if this tax proposal gets passed. But the idea is basically that you can get liquidity without selling your cryptocurrency. And there's actually a lot of tax benefits built into our system for utilizing debt instead of selling something. So in addition to not triggering a capital gains tax event by selling your Bitcoin, you're actually also, in a lot of cases, able to use what's called the investment interest expense deduction if you take the proceeds for a loan and invest it in something else, which is a lot of what our clients at BlockFi do when they're borrowing against their crypto. So that's one big use case.
A lot of people use BlockFi as well to earn interest on their Bitcoin deposits. So last month, CoinDesk reported that BlockFi was cutting the interest rates paid on large-scale Bitcoin deposits. Is that because there's too much people submitting their Bitcoin looking for yield and not enough big traders who are borrowing Bitcoin? So there's more Bitcoin supply with lenders than demand?
Yeah, I mean, ultimately, we're a sort of slow market maker for debt and credit markets, and the rates that we're able to offer our clients on BlockFi are as high as they possibly can be in terms of what the market will support. And over the past 6 months, we've seen the market position increasingly bullish, and generally, when the market is positioned bullish, there's a greater demand to borrow dollars and a lower demand to borrow Bitcoin. Additionally, there's been an increase in adoption of interest accounts and folks getting comfortable with the risks that are associated with earning a yield on their Bitcoin and deciding that they want to participate and earn some of that yield. And so, we try to change rates pretty slowly at BlockFi. It's very different than, maybe a DeFi platform where the rates, change in real time. And we've made a commitment that rates on our platform won't change more than once a month. Actually, the last time we changed rates on Bitcoin was in April of last year when we increased them coming out of the big drawdown in March of 21.
Zach, how does a downturn like today affect what you do? How does it affect your business?
Yeah, ultimately, a lot of the crypto borrowing demand comes from market making and trading firms, and the opportunities that are available to them that they're looking to capitalize on increase when markets are volatile. So directionally speaking, bearish sentiment or market volatility would increase borrowing demand for crypto. Bullish sentiment would increase demand for borrowing dollars secured by crypto.
So now, for those who are trying to withdraw, your terms and conditions say that BlockFi can halt the transfers and withdrawals during a volatile market. Is that what we're in right now? Are we in that kind of a market yet?
Yeah. So there's, in general, there's a big difference in terms of what operationally happens at BlockFi and what our legal terms and conditions say, which are kind of, written by lawyers and built to be as conservative and protective for the company as possible. We have never utilized the ability that we have in the terms and conditions to process withdrawals at up to a 7-day window. Actually, operationally, throughout the entirety of the interest account, we process withdrawals within 1 business day, which is our standard processing window. And we're doing the same thing now. In this level of volatility, like in the world of crypto volatility, this is not particularly extreme. We're within 1 standard deviation of, normal market volatility right now. You have to get to the, 25-30% range before you get out to 2 standard deviations. And so this is just another day.
So 2 Sigma event or
another day in crypto. Good morning. So you recently brought on former FTC Chris Giancarlo, and this is part of like a larger trend where we're seeing kind of these former regulators get more directly into the industry. But I'd like to talk specifically about the regulatory risks that you believe that you face. First of all, who regulates you, and what are some of the specific risks that could come from the regulatory side on your business?
Yeah, sure. So BlockFi is regulated in a similar way to fintech companies today. And what that means is that we have a, kind of a mishmash of federal and state regulations that apply to our business. So at the federal level, we're an MSB, money services business. And then at the state level, we hold lending licenses and money transmission licenses, depending on the state. In terms of the risks, I think that, crypto is still something that is having certain regulatory components be worked out. There's a lot more clarity today than there was, 3 years ago when we were the first company in the world to get lending licenses in the U.S. to make loans to folks secured by their crypto. But there's still a lot of things that need to get figured out. And for companies like BlockFi, there's kind of this long-standing challenge that we also have, which is the same challenge that fintech companies have, which is basically that there's not too many good ways to be cohesively regulated at the federal level. And as a result, what you're left with is working at the state level. And that can be relatively burdensome because you're doing things 50 times instead of one time. And also there's some intricacies within some of the different state laws, in particular New York for the crypto industry. But I think that the macro direction of regulation for crypto is moving in a great direction. And ultimately, despite the challenges that come with the U.S. regulatory environment, I think that we've generally been on the right side of enabling technological developments. And I think we'll get it right with crypto over time.
Zach, so as Emily mentioned, we had Chris Giancarlo, a former top commodities regulator, on the show. He headed the CFTC. Some would say that this is a sign, you're stacking your board with top regulators, with big names. Some would say that this is a sign that you may be considering going public. Is that the case?
Yeah, I mean, look, we haven't been shy about saying that we are interested in being a publicly traded company, and that's definitely something that we continue to work on. And in terms of our board composition, we think that part of that process of just company development, we're very large now, over 600 people around the world, managing tens of billions of dollars of assets on our platform and supporting hundreds of thousands of clients, comes with an increased focus on corporate governance and corporate structures. We recently completed our $350 million Series D round of funding. And so it's just a natural cycle of company maturation, and having the opportunity to work with someone that has, such a distinguished professional background as Chris Giancarlo, both in the private sector and the public sector, is a really, exciting opportunity for us.
Zach, we're seeing the likes of Maker get into real estate lending. Is that something you guys are looking to do, to borrow, lend against hard assets?
It's not something that's on our near-term pipeline. I think what you're more likely to see from BlockFi on that front would be a partnership with specialized firms that focus on providing mortgages to high net worth individuals that either have concentrated asset positions, or they're not a U.S. citizen, but they're looking to buy U.S. real estate, and facilitating a connection to the right places for our clients, where you can work with someone that will actually prescribe value to your cryptocurrency holdings, and BlockFi can represent the value of those assets through the statements that we provide and information about your account, versus us actually becoming an originator of mortgages ourselves.
All right, Zach, thanks so much for the update on BlockFi, and appreciate your insights.
Thanks for having me. Great to see y'all.
Thank you.
That was BlockFi CEO Zach Prince. Coming up, a look at Asia headlines and breaking down the crypto markets with Kyle Samani of Multicoin Capital. daily forecast and update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, April 23rd, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. South Korea's Financial Services Commission takes aim at crypto again. FSC Chairman Eun Sung-soo saying cryptocurrency cannot be acknowledged as real currency at the National Policy Committee meeting. Now, it's just the latest in rhetoric from authorities. But now crypto enthusiasts are pushing back. There's a call for Eun to step down, and it's gained momentum on South Korea's Blue House national petition with over 52,000 signatures. Separately, other petitions to the government slammed different tax treatments compared to stocks and equity traders. Crypto investors will be taxed if they make $2,200, but for wealthy stock traders, they're taxed at $44,000. And petitioners say that's discrimination and a double standard because the government wants to make money off the crypto industry, but refuses to acknowledge its value. Authorities fired back, saying they're not treating crypto unfairly, but rather giving stock investors a leg up. We spoke to a Korean retail investor who still feels hopeful about crypto's future there.
저는 앞으로도 계속 투자할 예정입니다. 금융당국의 규제가 진행될 예정이긴 하지만 규제가 곧 가격 하락을 의미한다고 생각하지는 않습니다.
And there's more regulation in Taiwan's crypto space, but it's seen as a positive step. Starting in July, the island's FSC will require top 8 crypto exchanges to report transactions over the equivalent of $18,000. Now, it brings crypto exchanges in line with traditional banks here in terms of anti-money laundering standards. We spoke with Wayne Huang, co-founder of XREX, a Taipei-based exchange. He welcomes the clarity and says many of the top players are already adapting, but some have work to do.
They might need to tune up their AML. They might need to adopt some better technology. They might need to acquire some third-party technology.
All right, let's take a look at how Bitcoin traded during Asia hours. 4 p.m. Hong Kong time, it dropped over 10% compared to the same time yesterday and ended at the $48,000 mark. As Bitcoin wrestles with the key 50,000 support level, crypto futures trading data platform BYBT shows short positions are dominating the futures market, indicating an overall market sentiment for a further decline in the BTC price. TOYA ZHANG, the COO of AAX Exchange in Hong Kong, however, says she's seen a more bullish outlook.
Our long volume of Bitcoin versus short is 10 times higher. And in terms of users, there are 5 times more users longing Bitcoin versus shorting at this moment.
And it's also a sell-off in the crypto markets. We're seeing a double-digit drop in the top 10 cryptocurrencies by 4 p.m. Hong Kong time. Modest gains in Asian equity markets today, lifted by rising stocks in Chinese blue chip companies. And speaking of the equity markets, we're going to leave you with this. NASDAQ-listed Bitcoin mining rig producer Canaan, which is based in China, saw its shares pop for a second straight day. That following the announcement that the company will be shipping nearly 12,000 Bitcoin miners to MAWSON Infrastructure Group. This is a Sydney-based digital infrastructure provider with operations both in the US and in Australia. And this truly highlights a growing trend we're seeing of mining groups finding favorable conditions to expand in the US and geographically diversifying the decentralized pool of miners. And that's the daily forecast. For more news shaping the blockchain and cryptocurrency trends in Asia, visit forecast.news. I'm Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Trade blocks indexes are now the CoinDesk indexes. So checking in on Bitcoin right now, the CoinDesk Bitcoin price XBX index is currently trading at 49,425. Bitcoin is down about 10.1% over the past 24 hours. And the CoinDesk Ether price ETX index right now trading at 2259. ETH is down almost 12% over the past 24 hours. And joining us now to discuss the crypto markets is Kyle Samani, co-founder and managing partner at Multicoin Capital. Thank you for joining us, Kyle. We're watching this market pullback. Tell us your take on what is going on today. How long will this dip last?
I don't hear anything.
Kyle, can you hear me now? Kyle, can you hear me now? Reaching out to Kyle.
Apologies.
Well, until we get Kyle back, maybe we can weigh in with Lawrence, who is our markets managing director. Again, we're watching the markets right now take a dip, take a pullback. How long do you think this will last?
Now I guess who can't hear you. Oh, you got to repeat that again, Christine, because now I couldn't hear you when you were just talking.
All right. So we heard from
technology.
BlockFi. We love technology and live television. It's a good combination. Yeah. So earlier we spoke with BlockFi, Zach Prince. He mentioned that he was buying the dip. He doesn't think that this will last one standard deviation. I mean, do you see this as part of a larger correction or just a momentary blip?
Yeah, and this is a question I had for Kyle. It's just a question of how much leverage there is in the market right now will determine just how deep this dip can go. If there's too much leverage in the market, of course, you can have more and more selling as prices go below the point where people get their essentially what the equivalent of a margin call in crypto. And
let's check back on Kyle. Kyle, can you hear me right now?
I can hear you loud and clear, Christine.
Excellent. All right. So we were talking about, everyone woke up this morning and saw Bitcoin tanking. We just heard from the Asian markets as well that there's an Asia sell-off. So how long do you see this lasting? Is this just a temporary pullback or part of a larger correction?
I'm not sure that the tax plan thing seems like a lot of people are talking about it. This could be brief. I mean, we see these things in crypto. It oftentimes rebounds within a day or two or three, or it could be, maybe a little 1 month pullback. I'm not terribly worried about a cycle top or anything. The amount of institutional interest continues to increase in crypto. And so I expect every dip to be bought quite aggressively. We've seen this happen repeatedly over the last 3-4 months, and I think that behavior will continue.
Hey, Kyle, we were just talking about leverage in the market. How much of a concern is that in general, as far as you're concerned, and particularly with Bitcoin, which tends to be fairly leveraged?
Yeah. So, I mean, for us as a firm, we don't run levered, so we don't really care for our purposes. Look, the leverage in crypto, everyone says on the surface it feels too high and it's dangerous, and yet, like the market, 4 years later, you have 100x leverage available to retail. The market still seems to function pretty well. So my tolerance for what is an acceptable level of leverage has increased because the system just seems to work pretty fine. So overall, I'm not really worried about any meaningful systemic risk.
Even in these occasional downturns, doesn't it accelerate it even more when people get when essentially the equivalent of a margin call and they're forced to sell, even though the long-term cash demand isn't as is still healthy?
Yeah, I mean, it by definition increases volatility. That's not a question, but it just, it's fine. Like, we just kind of don't pay attention to most of the short-term moves, and it makes it easier to think that way.
Going forward, how tied are other cryptocurrencies, or for example, the DeFi market, to the price of Bitcoin? Like, if we continue to see these sort of Bitcoin corrections, or if Bitcoin does crash further, I mean, do you expect that these other coins will move in tandem, or are they kind of just doing their own thing?
Yeah, so one of the kind of criticisms of the 2017 cycle was that the whole market was just massive giant beta and there was very little dispersion of returns. That is just outright false. A lot of stuff massively outperformed Bitcoin. And so I think that's not intellectually correct. And obviously on the way down in 2018, the same thing happened in reverse. In 2017 cycle, most of the assets were promises of things that would happen in the future, but at the time largely did not function. The market today is in a totally different place. DeFi is working. These products are real and useful, and many of them produce cash flows and have yields. And so as the prices of the underlying assets decrease, let's say a lot of these DeFi assets that produce cash flows, that by definition means yields increase. And as yields increase, inevitably that will draw in supportive capital that wants to get those yields. And so you have that angle of structural support that did not exist before that exists in the market today. So that's going to be one thing that causes structural dispersion of returns in the medium term. The second is just the entire rest of the ecosystem, both Web3 and DeFi, is now working. I mean, Audius has got 4.5 million users. You've got Brave has got 30 million users, and they're getting much more aggressive with what they're doing with their BAT token. You've got a lot of these really interesting examples of companies and protocol teams just doing awesome, cool stuff. And that number is going to continue to grow. Helium is another really, really interesting example of this. And those things, although they obviously all have some degree of market beta, it's impossible to escape that. They all have fundamental unique properties and different theses. And those theses are inevitably going to play out over different periods of time and at different rates. And so for that reason, I'm super excited to see dispersion of returns continue, which creates opportunities for firms like us to go make those kinds of interesting bets.
What do you think the next ETH killer might be? Or if you do think there will be an ETH killer on the horizon?
Yeah, so I think the term ETH killer is unnecessarily dramatic. It's just
ETH challenger.
Yeah, the term we use is challenger chains internally. So the big bet we've made and we've been quite public about over the last 3 years is Solana. We led all the rounds of private investment starting from May of 2018. The token listed on Binance about 13 months ago, and we've accumulated more in the public markets. Solana really solves the core problem that Ethereum has faced and continues to face, which is scaling. The Ethereum network processes about 1 million transactions per day, maybe 1.2 or 1.3, but something in that range. And there's not really a clear and credible path to increase that meaningfully. You might get it to 3, 4, 5 million. There are some reasonable proposals to get it there, but there's really no proposals that get you to 1 billion transactions per day or 100 billion transactions per day. Which, if you're going to really make DeFi and Web3 work for hundreds of millions or billions of users, that is by definition the required scale.
So Kyle, what's driving all this interest in ETH? Is it just DeFi alone, for instance? So, let's get back to the victim, ETH itself. Is it DeFi alone, or is it just that it's the poor man's Bitcoin, or what else is driving it?
Yeah, my sense, based on our conversations with a lot of institutional investors who've been calling us recently, is they get DeFi. It makes sense to them. And most of them are buying ETH as an index bet on DeFi, which is not, I think it's probably the wrong way to think about ETH, the asset. It's not outright incorrect, but it's definitely not optimal. And so I think there's been a fair bit of that buying happening over the last 3, 4, 5 months by a lot of large families and even some institutions that have been dipping their toes in the water. I suspect over the next 6 months, the Solana ecosystem today is already trading hundreds of millions of dollars in volume every day. This is generally not covered terribly well, but I think that's going to change. And I think Solana will be, that ecosystem will be trading billions a day in DeFi in the next few months. And inevitably, as that kind of fact pattern enters mainstream consciousness, institutional investors are going to say, okay, DeFi is not just ETH, and it's going to force them to revisit that assumption. And we'll kind of see how kind of capital reallocates as that becomes common knowledge.
All right, Kyle, thanks for your thoughts on DeFi and other coins. Good to get your perspective on that and joining the show this morning.
Thank you all.
That was Kyle Samani, co-founder and managing partner at Multicoin Capital. Coming up, Biden's tax plan and its effect on crypto, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
President Joe Biden is seeking to increase taxes on the rich to fund education and childcare. People earning more than $1 million a year could see their capital gains tax double to help pay for a $4 trillion plan to reshape the American economy. Joining us now to discuss is Gil Hildebrand, co-founder and CEO of crypto accounting firm Gilded in New Orleans. Welcome, Gil. Would love to hear on what you make of Biden's proposed tax plan set to be unveiled next week and how that will affect the crypto industry. And good to have you on the show.
Well, first of all, if you are worried about a change in the taxes, you certainly shouldn't sell your crypto today. So I'm not sure if Americans are doing that, but I definitely wouldn't recommend it. I see it as a buying opportunity. I think we are focused primarily on the business use case for crypto. We are seeing tons of growth, especially with stable coins used for B2B commerce. And when you're looking at that market, the tax implications are not as big of a factor. And so, for what we do, it really isn't a big change. And, we think that overall, this market is going to continue to grow.
Can you spell out a bit, just for people who don't understand taxes that well, like why it would be a bad idea to sell now for tax purposes?
Sure. So, when cryptocurrency is taxed as property, and so it's not taxed when you purchase it, but it's taxed whenever you sell it or send it or dispose of it in some way. And so, if you're worried about the taxes on cryptocurrency potentially increasing because of Biden's proposal, selling it now is actually a bad idea because, that tax treatment is likely to be retroactive. And so you could end up with a higher tax bill just because you were scared about ending up with a higher tax bill.
So speaking of sending crypto, is there any reason why somebody would pay employees in crypto? What are the tax benefits in it?
Sure. So there's two different use cases that we see, especially here in the United States. We see demand for businesses that want to pay their employees in Bitcoin, or for the individual employees wanting to receive their paycheck in Bitcoin. And they think of it as an easy and convenient way to dollar cost average into crypto as an investment. So you could think of it as saying, hey, I want to put 10% of my paycheck towards a 401k. Now people are thinking, hey, I want to put that towards Bitcoin. That's what we see in the United States. And again, it's not going to be taxed beyond the traditional payroll tax until you actually sell it. So if you're treating Bitcoin as a long-term investment, that's a good thing. Now,
from the from the employer's point of view, though, is there any benefit?
From the employer's point of view, it's a new benefit that you can offer to your employees. So it's a way of increasing retention. It could be a recruitment tool if you're trying to, project your business as a, forward-looking and embracing of new technology.
But they're not going to get any preferential treatment in taxes or anything. They're not going to avoid it. They still have to pay payroll taxes, et cetera, and treat it as a dollar value of the Bitcoin as they're paying it out to their employees.
Yes, that's correct. There's no tax benefit to the employer. They're still going to have to pay their payroll taxes just as they normally do. It's just looked at as an alternative method of payment than a direct deposit or cutting a check.
Well, slowly we are hearing from a trickle of companies that are paying staff with crypto. The mayor of Miami wants to give city workers the option to be paid in crypto. Same with the Sacramento Kings, and NBA players can be paid in Bitcoin. And you believe more will follow eventually?
Not eventually. It's happening now. My team is actually at a crypto conference in Miami this week, and they've been approached by a number of different companies who are looking to do this today. And that's what we see within the US. Now, we also see another use case where There's, Western businesses that are, employing people around the world, could be in South America, could be in Asia or Eastern Europe. And they see crypto as a convenient way to pay these international employees or contractors. And in that use case, it's often not Bitcoin that's being used, but a stable coin like USDC. The news today about Coinbase Pro listing USDT is actually quite interesting, because in Asia, the Tether USDT stablecoin is, the dominant stablecoin, whereas here in the US, it's USDC. So I think it'll be interesting whether we'll see demand from employers here in the US who want to start paying in USDT versus USDC, which is currently dominant here.
Mm-hmm. Gil, thanks so much for updating us on your tax insights. Appreciate you coming on the show.
Thank you.
All right, that was Gil Hildebrand, co-founder and CEO at crypto accounting firm Gilded. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Hey there, Nick. How's it going?
Hey, it's going. How are you?
Very well. Okay, so we just heard from, Coinbase is going to be listing USDT. What do you see in that in terms of the regulation policy front?
Yeah, that was a interesting move by Coinbase last night. So I guess just really quickly, we should establish that, this is Coinbase listing it on its professional trading platform, Coinbase Pro. This is not yet available on the retail platform or the mobile app. That being said, that's not saying, they're not going to do this in the future. Just right now, it's limited to the Coinbase Pro app. Coinbase does this with a lot of tokens and cryptocurrencies. They list on the professional app first and then move to retail later. And then the second thing is this is just USDT on Ethereum, I believe the ERC20 version. So it's not every version of the stablecoin. So it is an interesting move. Tether, of course, has had its share of controversies over the past couple of years, notably around, questions about its reserves and backing. Tether, it's, trying to address these this year. It's publishing attestations. It's supposed to be filing reports to the New York Attorney General's office that break down what its reserves look like, and those reports should be made public as well. They haven't been filed yet, so we're still waiting to see what they'll look like for sure. But that's going to happen next month. So,
Nick, did this deal with the New York Attorney General make Coinbase more comfortable trading Tether because of the increased reporting? The New York Attorney General had called Tether, basically said they're liars, that they lied about their assets. So now with these attestations and also with them being forced to publish at least some data with New York, does that make Coinbase say, okay, well, it's good now, let's go?
So I haven't had a chance to talk to Coinbase yet about this, but my guess is yes. The fact that Tether has committed to publishing, regular reports. I think it's every, I forget if it's once a month or once a quarter, but, Tether has committed to publishing regular reports to the New York Attorney General's office that break down what its reserves are. So yeah, I think that might be a factor there for sure. Coinbase's own stablecoin, the USDC stablecoin it issues with Circle as part of the Center Consortium, that one has, regular attestations every month that, go into quite a bit of detail about where the funds are and how they're being held. Most of the US dollar stablecoins that are launched in the US, work off that same kind of transparency. So it definitely, it seems to indicate some kind of regulatory comfort.
We have to wrap, Nick. Thanks for joining us. That's it as well for First Mover. Thank you, Emily Parker and Lawrence Lewitinn, for joining us. You're watching CoinDesk TV.